1310 WIBA and Ask the Experts, joined this week by Tom Plumb with Wisconsin Capital Management. Tom is a chartered financial analyst. You can learn more about Tom online, wiscap.com. That's WISCAP.com. Tom, how you doing this morning?
Oh, we're doing great, Sean. Beautiful day in Wisconsin, right?
Yeah, it is a darn great day, and it's a beautiful day, and we've got a really important conversation ahead. We've also got a special guest joining us this morning. We'll get to our special guest in just a moment. But real quick, Tom, a quick review of some of the things we've covered the past few weeks. It's really been a whirlwind of just great topics and great conversation. Let's talk a little bit about what we've covered the past few weeks for people who may have missed.
Well, Sean, we talked about asset allocation, how people should structure their portfolios, including their cash needs. We've talked about the purchasing power protection that you need and the power of compounding, which we still call the eighth wonder of the world. And then last week we had a moment that we talked about the myths of portfolio construction and how they can prevent people from meeting their financial goals. You know, stocks, bonds, real estate, insurance products, all of them have distinct characteristics, but they must address individual circumstances.
And for folks that may have missed any of those previous programs, they can, of course, listen back online over at the website wiscap.com. That's WISCAP.com, or, of course, available to you as well on iHeartRadio and WIBA.com. And today, the notes say we're going to be talking economic environment and how a new tax law might affect expectations. And we brought along a special guest this week. You've heard his name mentioned on the show several times. Really excited to welcome Nathan Plumb to the program. Nathan, how are you doing this week?
Oh, wonderful. Thanks for having me on. I'm happy to be on the program here with my dad.
It's really exciting to have you along. Before we get rolling then on this week's conversation, let's learn a little bit about you, Nathan. What brought you into Wisconsin Capital Management? What do you do for fun? Let's talk. Let's get to know you a little bit, Nathan.
I went to undergrad, and then I decided to work in Asia for a little over 3.5 years. So I spent 1 year teaching American history out of a British textbook in northeastern China for a year. And then I moved to northern Tokyo, spent 2 years at a consulting company there. And then I finished up at a university there called Waseda University. And then I moved back into Madison, which has now been a few years back. Came back to Madison, and then was trying to find other work to do, but everyone told me that why you're not working with your dad. So eventually that started happening, and then I kind of rose through the ranks, and now I'm really happy to be a portfolio manager at Wisconsin Capital with my dad.
It's great to have you along and great to get to know you. I had a chance a couple of years ago. I had a friend of mine living in Tokyo, and that is a fun part of the world. And I for a lot of folks, we talk to about financial planning and achieving dreams and reaching goals. I think for a lot of people, travel, and I would hope that folks, and I think, Nathan, I don't want to speak for you, I'll let you, but that is one of those places that if ever anyone gets a chance, they should definitely visit for sure.
I definitely agree, and the yen is cheap right now, so you got to book that ticket now.
Perfect. Well, I did not know that. I may have to do that right after the show this morning. We're talking this week with Tom and Nathan Plumb. They are with Wisconsin Capital Management here on 1310 WIBA. The website, wiscap.com. That's WISCAP.com. So, Nathan, let's kind of break down and get down to businesses. When it comes to working with clients, what are some of the big concerns? Actually, let's just go even further. What is the biggest concern you hear, Nathan, from clients?
So it's a wide range of issues, and each kind of person is a little bit personalized, and the way they communicate. So you have to kind of respond to each individual client and their needs at one time. So they might come from from financial questions to just things out of left field that are bothering them, that is affecting their financials. So it's always kind of a unique discovery. So you can't really go with a lot of preconceived notions in it, so just a lot of asking questions, let the client kind of steer where it goes, and then you can kind of adapt and then see in that way the best way you can help them. So you can't really predetermine how a meeting is going to go sometimes, so you just got to keep it open. That's how you keep it personalized, and that's how you best serve your clients, because you just can't cookie cutter everybody and just run them through the mill.
Nathan, do you ever run into folks feeling like sometimes there's too much of a good thing? Like, we look at the stock market, where we've gone, and, seeing these record highs, and, people going, oh my goodness, it's been going way too good for way too long. Like, folks almost feeling like at some point maybe the bottom will fall out, and getting kind of uneasy about some of the overall U.S. economic stuff?
Yeah, that's absolutely a topic that comes up. So Right now, U.S. economy is so complex. There's always parts that are going well, and there's parts that are not going well, and so it's really hard to get overly negative at any one point. So even if you see some issues and go, "Wow, that part of the economy is doing really, really poorly," I should be really concerned. Maybe I should really just stuff cash in my mattress or something like that. Usually, if you have that mindset, you're almost 10 times out of 10 wrong. And so there's always you always have to think that the American economy is special. It pivots and zigs and zags in ways that you probably wouldn't anticipate. So if one industry is kind of going down, another industry is coming up. So it's really hard to be down on the U.S. economy. It is so complex, so intricate. There's so many variables. And that way, it's really hard to just see the skies falling like in the financial crisis.
Talking this morning with Nathan Plumb and Tom Plumb. They come to us from Wisconsin Capital Management, right online at wiscap.com. That's WISCAP.com. And Tom, before I ask you a little bit about, I know this new tax bill has got a lot of folks asking and wondering a bit about it, how that can apply, how they can benefit, what they need to know. Real quick, how about you, kind of your take on the economy right now and kind of what we've seen number-wise, Tom? What is kind of breaking out and shaking out there?
Well, Sean, this has been what they call earnings season, and most companies report their second quarter earnings and also give you some expectations of what they think they're going to see for the rest of the year. And with 73% of the S&P 500 already reporting, basically they're up 10% in earnings year over year, exceeding a lot of people's expectations, which were on average down to about 2% before the quarterly report started. So we're seeing that, as Nate was saying, some parts of the economy are not doing that well, but certainly the communication, technology, and even the healthcare area look like they are going to continue a double-digit earnings growth. And of course, the stock market is a function of the earnings and the earnings expectations that people have. So we're actually seeing some real positive numbers and how people are addressing what they think the economy is going to look like for the rest of the year.
As we talk this morning with Tom Plumb and Nate Plumb, of course, they are with Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com. And Tom, I mentioned the new tax bill, and I know that there's a lot of, as folks dig in, and folks like you and others dig into this these changes, there's some stuff there that folks really should be aware of, isn't there?
Oh, yeah. The Tax Foundation, they estimate that the tax bill will add 1.2% to the long-term GDP in the United States. But, of course, that's one group's estimates, and there's going to be some positives and some negatives to that. They're actually expecting that personal income, because of that tax bill, is going to be up 2.9% this year and actually 5.4% in the following year.
Oh.
Other estimates, of course, different, but we're looking ahead and we're seeing that the tax bill has some provisions, some of them that are, in quote, permanent, meaning they're permanent until Congress and the president sign another bill.
Sure.
But some of those look like they could really be positive for certain types of investment in the United States.
Talking this morning with Tom Plumb and Nathan Plumb with Wisconsin Capital Management, online, wiscap.com. That's WISCAP.com, WISCAP.com. Great website to learn more. You can also listen back to this and previous shows podcast there as well. And so, Tom, when we kind of get into some of that, what I think one of the notes pointed out, 1,000-some page bill, obviously there are some things there that are could be quite impactful. What are some of those areas that we may need to pay extra close attention to?
Well, there's certainly, as we said, some of those provisions which are supposed to be permanent could really impact people's planning and investments and business investments. So the number one thing that they wanted to accomplish and did is they made the 2017 tax brackets permanent rather than reverting to the pre-2017 higher brackets and higher rates of taxes for people. The second thing they did is that I think is pretty significant is they raised the a stated gift tax exemption to $15 million next year, and it's going to be indexed for inflation thereafter. And they also retained a thing called portability, meaning that if a husband and wife don't use all of their $15 million exclusion, the other one can use it on the second death. And then the third thing that I think could be really important is this 100% bonus depreciation on business capital and research and development investments.
Ooh, I know there's a bunch of folks sitting in their car right now that really perked up on that last thing. I know we've got a number of business owners and business leaders that listen each and every day, and I want to get into that a little bit more as we talk this morning with Tom and Nathan Plumb of Wisconsin Capital Management. The website, wiscap.com. That's WISCAP.com. Great website to learn more about Tom, Nate, and the whole team at Wisconsin Capital Management. Also a great place to start that conversation to get to know them and see if you guys are a great fit for one another. Again, you can learn more online, wiscap.com. That's WISCAP.com. We're going to continue our conversation with Tom and Nathan. We'll talk about that 100% bonus depreciation, what type of impact that may have. We will do that and so much more next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts, talking this morning with Tom and Nathan Plumb. Of course, they come to us from Wisconsin Capital Management, the website, wiscap.com. That's WISCAP.com. Great place to get to know the team, learn more about Wisconsin Capital Management. Again, all on their website, wiscap.com. Talking this week about the new tax laws and what to expect. And again, a very large bill. There's a lot of details in there, some small, some quite significant, and especially for folks that may be business owners, business leaders. And just before the break, Tom had mentioned, of course, that 100% bonus depreciation on qualified business capital and R&D investment. Nathan, let's kind of get into that. What does that mean? And let's talk a little bit about the potential impact that could have for businesses here in the United States.
Yeah, exactly. Just to level set everyone, so usually if you take Accounting 101, they have something called the matching principle. And essentially, hopefully your mathematical accounting matches your useful life, whatever asset you buy. So if you buy a building, usually you depreciate it roughly over 40 years. If you buy a piece of equipment for your factory, it's usually you can depreciate over 5 years. So in the past, you would, for example, buy a $100,000 piece of equipment. Each year you would depreciate it straight line. So each year over 5 years, you would depreciate it over $20,000 a year. And then the asset is fully depreciated, if that makes sense. Mm-hmm. With this new law, if you buy a $100,000 piece of equipment, you get to deduct 100% of it in the first year. And that's kind of a lot of jargon, but why does that make a difference? So that really frees up the cash flow of the business. So you can hire more workers, you can buy more product, you can try to make your business more profitable. And so that's one way to do it. And then if got your executive MBA or you're from UW Wisconsin, you do even better than that. So what you would try to do is you would go to your bank or credit union, you'd ask for a loan and say that loan amount would be the amount for your depreciation. So roughly, in this case, about $20,000 loan. And net, after you did all that, essentially you'd pretty much have an interest-free loan from the IRS for 1 year. So if you're running your business correctly and not doing anything just abnormal, that is a huge boon for small businesses, especially if you're under $75 million in assets. So that is something you should talk about your accountant and your personal banker and probably us, and if you have any questions about that.
And Nathan, you mentioned having that exec MBA degree. You have I think I know somebody with one of those. You have you have the executive MBA, don't you?
Yeah, I graduated from UW, I'm a proud business badger, and I really love serving the community. And yeah, still love all my professors, and I'm still in touch with a lot of my classmates, which I really enjoy.
It's an amazing school, and we've got some great content this week, as always, as we talk with Nathan Plumb and Tom Plumb. Of course, they are with Wisconsin Capital Management online, WisCap.com. That's WisCap.com. And Tom, as Nathan kind of laid out some of the uses for this, let's kind of get into kind of how that can also help businesses manage things like R&D and those expenses.
Sure, Sean. Research and development is a big part of any business that wants to grow. And when the new bill allows you to deduct that either immediately, like before it did in 2022, you were able to, or you could amortize it over different time periods. And why that's important is because sometimes you're expensing money for what you hope will be future revenues and future profits. And so you can match them up, which makes the most sense for you. That method is determined by you talking to your tax advisor and making sure that you're making the best use of that deduction, which is going to reduce your taxes. And as Nathan said, when you can reduce your taxes in any one given year, it's basically an interest-free loan from the IRS.
That's very nice, and it's also great to have those options as well. And Nathan, what about for when it comes to some of the provisions, when it comes to business interest deductions, and I know that is when it comes to trying to manage a business, we were talking earlier about how this tax bill is, and kind of use air quotes, permanent, but as we know, Congress, Washington, D.C., they like to change things, and it's there for now, and they may call it permanent, but we just never know. Having some flexibility here is important, especially as we see certain provisions, like, for example, green energy credits, things being eliminated. Having this as an option has got to be a really, really great benefit for businesses.
Yeah, and that was the intent of the rule. Of course, no rules are perfect or a panacea. So if you're in economics, they would say that you're pulling forward demand. So instead of buying your machine next year, you would buy it this year. Mm-hmm. So that's always the kind of fear when you have these kind of big stimulation plans. They're like, are you just pull forwarding the demand and then waiting for the level set or equilibrium coming later? But yeah, for now, it's a great opportunity, and if you're, running your business in a, in a prudent manner, and you see real growth and you see real opportunity, like this really enhances you.
I want to talk a little bit more, and Tom will pull you in just a moment about some of the tax stuff. But Nathan, when you're talking with folks as well on this, the businesses you work with and the folks you work with, I've got to guess this is a pretty exciting time for them. As obviously there's a lot to digest, but as we've been talking this morning, it sounds like more options. It always seems to be a better situation, whether it's for your personal finances or for trying to manage a business. Having different avenues and different tools to benefit in different timelines has got to be a great benefit for folks you're working with.
Yeah, that's true. And then there was another act that's kind of got politically, I guess, permanent, is the Secure Act. Mm-hmm. And under that one, there's great things for employees as well. So if you're small businesses, they really incentivize you to start a retirement plan for your small business. So if you're working at a company that's a small business and doesn't have a retirement plan, there's under that rule, if they set up a retirement plan, it kind of it's almost fully deductible within the first couple of years. So it's a real advantage. They try to incentivize small businesses to start retirement plans to really help their employees. And so, if your business owner hasn't realized that, I'm happy to talk to them for you as well. So, not only are some of these things really help business owners, but some people really help employees. And then the key thing about being, an employee is that you just have to really manage your money well, know where your money is, and how it's working for you, and kind of where your risks are. So a lot of these financial products that kind of mask, as my dad said before, they mask volatility but not the risk. Yeah, and that's we're happy to educate people on that. So we'll just kind of tell you what you have, and if we're the best fit for you, that's great. If not, there's a lot of people out there, and there's a lot of people that need education, financial education out there.
And it's really well stated, Nate, because I know a couple of weeks ago, Tom and I talked a little bit about finding that right relationship, and finding that a lot of this is. Obviously, the expertise, the knowledge, the tools, that is really obviously ultimately the most important. But having a good relationship when it comes to financial planning, when it comes to managing money, making sure that goals and ideals and risk and other things, tolerances, those all line up. And I know, Tom, also one of the things, we talked earlier a little bit about some of these special enhancements. I know that for businesses, smaller businesses, there are some exciting options as well for them in this, aren't there, Tom?
Oh, there definitely are, Sean. And in fact, we call it what they call the qualified small businesses. And those businesses with less than $75 million in assets. And of course, that covers a lot of people in our viewing area. Mm-hmm. But those enhancements are very special on when you start to look at liquidating your business or moving on, selling your business. And that's the time when you really need to have your advisors lined up and coordinated. You want to talk to your tax advisor, your legal advisor, and your portfolio manager or financial advisor. So again, we're very happy and excited when we're part of those teams and working with qualified professionals to help our clients.
It's really an exciting day to start that conversation. Again, today is the day to do that. Get to know the folks at Wisconsin Capital Management, Tom, Nathan, and the whole team, all on their website, wiscap.com. That's WISCAP.com. That's wiscap.com. Tom, Nathan, it's great chatting with both of you guys. Have a great day, and we'll talk again real soon.
Thank you.
Of course, news comes your way next right here on 1310 W.